Hi, Jonathan. Great to see you. We've got the honour of taking part in another asset finance Brokercast, and this one very much designed to help our broker partners in terms of credit applications. So we entered the market some 7 months ago now into the asset finance market, and how that time has flown by. Can't believe it's August already. So we've got a huge passion and a huge desire to work with our broker partners and improve our offering to our broker partners to help get the right results for their customers. So this broadcast is specifically looking at how we can help our brokers and how your team can work with the brokers to get the right outcomes for their customers. So with this in mind, can you tell me about your role and an introduction and an overview of your team?
Yep, sure. So I'm John Crook. My role is the head of underwriting for asset finance, obviously. So I've currently got a team of 4 underwriters. And as you say, since the beginning of the year, we've been making decisions on a range of deals coming through, predominantly or all HP at the moment, hire purchase. And within my team, I've got some wide range of experiences. Recently bringing on a guy who's got 5+ years in asset finance. For me, I've had around 10 years experience in asset finance in a range of different roles at Lombard and latterly Aldermore. The last part of my role centres around kind of collections. So I've got the collections manager for the bank. And because we're quite new, there's little that needs to be done from an active collections management perspective. However, clearly, as the portfolio grows, that's going to become a bigger part of the role going forward.
Sure. So, as I say, we're all about collaboration here. We're very much one team, and we want to provide the best outcome for our brokers and their customers. So, how are you and your team making that happen for our broker partners?
So I suppose, like I say, we want to have the right amount of expertise to be able to make decisions that are pragmatic and appropriate for the customer as well as Allica. It's quite a fine balance to strike, and from my previous roles, I know how hard that can be, made perhaps a bit more challenging because of the relative newness of Allica and the size of our portfolio. But broadly, we want to be able to support these SMEs in whatever it is that they want, to ensure that they can buy the assets that is going to allow them to replace older kit or to fulfill a project or a contract that they've recently won. One of the things that at the moment we're not doing as much, but we want to get more into and involved in is providing underwriter access, to discuss deals with both yourself, Brandon, and the team, but also with the brokers, so that we can kind of come to those conclusions and understand the story perhaps behind the deal to allow us to write them where perhaps it's more complex or challenging from a base information perspective. And all of that's kind of done, like I say, within our risk appetite, what it is that Allica wants to do and can do, and in the context of a small bank that's kind of trying to grow safely to ensure that we're able to continue growing and doing more and more deals as we get more experience under our belt.
Excellent. And we've already done that, haven't we, to a certain degree? We've had some good outcomes where we've jumped on a Teams call for the more complex deals with the broker and yourselves, and it's worked really well.
Yeah, I think it's really important to have that kind of access available. It can absolutely be a challenge when you're trying to have quick turnarounds and come to decisions based on the information provided. But as we'll touch on in a bit, that there's not always that full suite of information, or some context is required that really gets under the skin of the deals that isn't perhaps immediately available from a write-up or a set of accounts.
Yeah, good. So in terms of sort of suite of information and one thing or another, what does good look like in terms of applications from our brokers, and the broker relationship, I guess, in getting it, being an open relationship and getting the information to you first time?
So the thing I always start with and think is kind of, in some respects, most important is a really clear broker write-up. Now, we don't want war and peace. We want kind of clear, concise articulation of the key risk points for the deal. Now, I'm kind of a view that there should be a proportionate approach. If it's a smaller £30,000 deal, you don't want to be writing 10 pages. If anything, that's a bit scary for my guys because they think, what's wrong with that deal, sort of thing. I think, but for the bigger deals, clearly more information may be pertinent. Alongside that, from a financials perspective, we'd like to see full sets of accounts, bank statements where available, as well as management information, if the business provides it and creates it, etc. I think the other key one to touch on is a COVID statement, and we'll go into this in a bit more detail later, but that's a kind of issue that's affected many different businesses, if not all different businesses, in some way, shape, or form. So understanding, even if it's been a positive impact, perhaps for certain sectors, it is still really useful. The only other thing that I'd probably mention would be specific to the individual transaction. So if there's a deal that has a certain contract that's backing the lend, etc., it may be worthwhile having that contract or at least some kind of commentary surrounding it to bolster the information that we're getting from a kind of near mandatory requirements perspective.
Yeah, and I mean, obviously, sort of from my point of view, seeing reviewing some of the applications, and then sort of being almost the go-between between yourselves and the broker at times, there is that clarity issue, isn't there? There's almost tell us everything, and we can make our decisions based on the information that we've got in front of us.
Mm-hmm. Absolutely.
So understanding that we don't always get everything that we need on the transactions. So what are the most sort of common additional information requests that you get, and what would help most if you got those up front?
Yep. So I think key ones to start with is just getting that more basic information right. So seeing the account, seeing the bank statements. Sometimes we just don't get those, and those are kind of key bits of information that are going to allow us to get behind the context of the business and understand the fundamentals of how it's trading and all of that kind of good stuff. Next to that, quite often in sets of accounts we see that there's just another creditors or another debtors that could be a large portion of that business's balance sheet worth, or a big liability, and just simply breaking that down so that we can understand what it is and either contextualize it from a serviceability perspective, or to some extent ignore it because we understand the risk behind it and we're comfortable with that. And the last thing would be the COVID statement. So like I said earlier, it's really important that we kind of get that information up front so that we can make a decision from a coronavirus perspective, understand the risk, and understand whether we need to do any additional kind of due diligence to mitigate or understand it better.
Excellent, thank you. And sort of finally from me, I guess, is sort of how does CBILS loans and bounce back loans, how does that impact the customers from an underwriting credit perspective? I mean, obviously, the government put the help there for the businesses to access. We've seen some businesses that have done it, others that haven't, others that took it as a precautionary measure. How does it affect the way you underwrite it from your point of view?
Yep. So I think the first thing that we consider is with those government loans, it's because the customer potentially needed support. So coronavirus affected them. So it's about understanding, to beat the drum again, what is it that coronavirus has done to this business and how has it affected it? Subsequent to that, clearly this is debt that has been either not needing to be repaid or at a lower rate without interest rates. So then it's about understanding how it's affected the business's serviceability. So how is it going to afford those loans going forwards, and how is it going to also afford the loan we're considering and any existing loans. And the final thing that I kind of try to draw on and consider is around the sector and how that's been impacted, and that wider context of how CBILS, coronavirus, etc., is impacting the business and the sector that it operates in. Because we are looking at individual customers, but that more macro view, especially for some of our larger transactions, can become really important to understanding the likely trade going forwards, and how coronavirus is impacting that business and its wider competitors and counterparts.
Excellent. Thanks, John. I think that sort of puts a real good overview onto our perspective and what we're looking at, and also hopefully helps our broker partners get more of the information base into us on a right first time basis. So we can turn the deals around quicker. We can collaborate between the three of us, and get the right decision in for the customer, and support the SMEs out there, which is what Allica Bank's all about.
Yeah, I agree. That's what we're here to do, and anything we can do to support brokers to getting deals done, and their customers, more than happy to have a chat and discuss and try and get to a good resolution.
Excellent. Thank you, John. Thanks for joining, and I'll
Cheers,
speak to you
Brandon.
soon.